Hey guys, welcome back. You're still tuned into Trading Hour. Now, as we head into the second half of December in the thick of the winters, we are joined by the management of Monte Carlo. We have Sandeep Jain joining us, Executive Director of Monte Carlo, to talk about how the demand is looking and, if there has been a pickup since Q2. Mr. Jain, thanks a lot for joining us on the show today. So, we are getting into that proper winter season. Tell us how demand is panning out, because I do know Q2 was quite weak. We also did have the festive season, moving into Q3. So do you expect a significant uptick in this quarter, in Q3?
Very good morning. If we see as we begin the third quarter, basically October and November have been slow, again because of discretionary spending was down and because of inflation. But in December, we have seen that the demand has picked up, and we hope to fill the gap which we lost in October and November in December itself. So going forward, I think that we should have a good winter season ahead. And also this year, because of basically low footfalls, the end of season sales have started 1 week earlier, so that will definitely boost the sales.
Morning, this is Rima here. So last December, you did sales of about 520 crore. Do you think you will be able to achieve a similar number in Q3, or will it be lower year on year?
I think we'll be able to achieve a similar number.
Okay, so Q3 should be flat year on year, around 500 crore top line. What about your full year guidance? Go ahead.
Yeah, see, already we given the full year guidance that the revenue should be flat this year. We don't anticipate any growth, or it should be a single digit growth because of inflation and because of less discretionary spending.
So you're sticking to your revenue guidance of flat to at best low single digit top line growth this year?
Yeah, you're right.
But do you think you will get any kind of growth? Because in the first half of the year, your revenues declined by about 2.8%. Q3 is going to be flat year on year. So do you think full year it's even possible to get a low single digit kind of a growth?
Yeah, the reason is that we had a very good, strong, a trade show for summers. So that would definitely boost the summer sales going forward in Q4. And actually, we had double-digit growth in volumes in trade show, which happened 3 months back in summers. So that gives us the confidence that we'll be closing this year at a flat note.
Okay, Mr. Jain, 2 questions. A, you said that footfalls have been lower. I want to get a sense of how much lower do you think footfalls are this time around versus say last year. And also, in terms of the end of season sale discounting, are you looking at anything more than you would usually do in order to bump up sales?
The end of season sales have started 1 week earlier as compared to last year, and the footfall have been lower by 10% if we see as compared to last year.
Footfalls lower by 10%.
But I don't. So I don't see the sales going up. USS is going up at brisk pace, particularly in next 15 to 20 days. I think it will remain stable at the last year discount level only.
Got that. You had plans to open about 50 to 55 stores this year. How many have been done so far? And are you on track?
Yeah. I think already 40 have been opened, and we are on track to achieve our guidance of 50 to 55 stores in this financial. Maybe we surpass this guidance.
Okay, I also want to talk to you about your margins. For Q2, it came in at around 16%. What can you expect for the full year? Because, a lot of the costs have been coming down. I mean, even costs like cotton are at multi-month lows, right now. What do you expect in terms of the margin profile for the full year, if you can tell us?
We stick to our guidance of 20% EBITDA margin plus minus 100 basis points, as we given last year also, as we given the last phone call also.
Okay. FY25, are you taking any kind of steps to revive growth, since FY24 has kind of been a washout year, no growth kind of a year? Are you taking any big radical strategic steps to bring the company back on the growth path?
Definitely, yes, because the store addition which has happened in this last 3-4 months, and also the stores opening which are planned for next financial year, and also some of the categories which have started growing now, which were earlier, they were just started. So I think that we should be on a growth path of at least 10 to 15% going forward in next financial year.
Okay. We also want to talk about this, move of yours to enter the leather shoe space. Tell us a little bit about that because it's, very different and very unrelated to the apparel segment, really. So take us through what you, have planned over there. How much do you want it to be of your business? Is this a premium offering?
Yeah, this is basically a test launch at our bigger stores, which have
Okay.
more square feet area. So this is a test launch kind of thing. And we think that this space is basically not crowded much as compared to athleisure wear, footwear, where we have many brands. So in formal shoes, we have less brands as compared to those brands. So it gives a good category to go ahead in this. So, but it's a test launch for our, yeah.
Yeah, what would the margin profile look like on this? I'm guessing it's much higher, right?
I think we need to see the margin profile, but we think that it should be same as Monte Carlo we have. But the category is very small, so it's insignificant talking about the margin at this moment of time.
Okay.
All right. We leave the conversation here for now. Thank you very much for joining in. That's Monte Carlo. Growth is going to be flat for the company. In fact, even stock-wise, it's not done much. Year to date, up 2.8%. In the last 1 year, up 1.3%. So it's been flat in terms of the stock also. We will slip into a very short break. We'll come back and talk market technicals. The Nifty is just broken below the 21,400 level. Videsh Thakkar joins in next.